Elsewhere, Ghana's central bank has slashed its benchmark interest rate by 350 basis points to 18%, marking one of its most aggressive policy easing in recent times. Well, the decision comes as inflation continues to fall sharply from a peak of 54% in December 2022 to a single-digit levels, reflecting a stronger than expected economic recovery. We're announcing the move on Wednesday. Bank of Ghana Governor Johnson Asiama said a majority of the Monetary Policy Committee supported the cut, noting that high real interest rates had created room to ease policy and support growth.
The Policy Committee held its 127th meeting from this Monday, November 24th, and just concluded this morning. And as usual, this was to evaluate recent economic developments and to assess risks to the outlook in terms of inflation and growth. And this briefing, just as the past ones, summarizes the key discussions and the committee's decision on the monetary policy rate. So first, in the global context, growth has held steady despite major policy shifts supported by easing financial conditions and fiscal stimulus in many countries. Notwithstanding the steady growth conditions, the outlook remains fragile amid a still volatile trade environment and ongoing geopolitical tensions. Global headline inflation has eased further on the back of lower energy and food prices. However, the pace of ease in inflation remains uneven, especially for countries adversely impacted by the volatile trade environment. The ease in global financing conditions since April 2025, driven in part by declining long-term bond yields and stronger equity markets, has helped moderate external financing risks. Central banks are monitoring these developments closely, and policy decisions in the months ahead will be driven by incoming data, especially on the trajectory of inflation. Now, on the domestic front, growth continues to gain momentum. Following the strong GDP outturn of 6.3% in the first half of the year, the monthly indicator of economic growth recently released by the Ghana Statistical Service point to a provisional growth of 5.1% in August 2025, compared with 4.9% in same month of last year, and this was driven by the services and agriculture sectors. The Composite Index of Economic Activity is also posting strong gains. At the end of September, the bank's updated Composite Index of Economic Activity, which we also call the CIA, recorded a strong growth outturn of 9.6% compared to 2.9% growth for the corresponding period in 2024. Industrial production, international trade activities, credit to the private sector, and consumption contributed to the increase in the index over the period. The latest confidence surveys conducted in October 2025 reflected continued optimism on current and future economic conditions. Also, Ghana's Purchasing Managers Index improved on account of new orders in response to the increased pace of economic activity. And these taken together, the gains indicate that the negative output gap is closing so far. The expectation is that should this momentum be maintained in September 2025, the GDP growth outturn for the year will remain strong. Now on inflation. Inflation decline in the year has been steady and on target. From 23.5% in January 2025, headline inflation has eased to the bank's central target of 8.0% in October.